What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 57. It's August the 30th, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about the important levels that we have on the chart today. So we have our closing price from yesterday's session, and that price is represented by the purple line down here. And that price level is 34,883. So let's go ahead and get into our market analysis. So let's start from 9:30 when the market opened. So when the market opened, we saw that we initially had a spike to the upside that was followed by a higher low. So once I saw the higher low, I circled it up, drew my level of support across it, and we saw prices come back, retest that level multiple times, and then eventually we saw the prices continue to move higher for the next leg up. So once we got up to this swing high up here at around 35,070, we pulled back, created another higher low. So I pulled out my level of support, drew it across the lows for that higher low, and then I used that as a reference point to go long from as prices came back into it. And that's pretty much what led me to trade number one. So I went long as prices came back to retest a previous level of support, and that we obtained that level of support from the higher low. Now on this particular trade, prices were able to come back and stop me out for break even. And when you trade with the strategy that I do, my stops are very tight. So sometimes in the market that protects me from having the market reverse against me, but there will be some occasions where that does prevent me from catching profit on trades that come back to my break even and then go to my profit target. But that's just something that I have to deal with, and that's part of my strategy. You got to accept the pros and the cons that come with whatever strategy you decide to use. So for me to be able to accept that trade is what should happen, but that's not what I did on trade number two. On trade number two, instead of just saying, okay, trade number one wasn't successful, I was like, you know what? I'm going to just go long at trade number two anyway, even though we are a little bit higher in the uptrend. And that's not really the decision that you want to make. Whatever pros and cons come with your strategy, you want to be able to accept those. And when you get the negative side of something that usually works for you, don't try and fight the market and take a revenge trade and say, you know what, I'm just going to push the issue anyway. That's not what you want to do. You want to make sure that you stay disciplined and you stick to your rules no matter what. So that's the main thing I took away from trade number two. For one, don't revenge trade. And number two, don't go long at higher prices towards the highs of the swing. That's also the lesson to be learned right there on trade number two. So after trade two got stopped out, we see prices come back, retest a previous level of support. They came back, retested the bottom area of what used to be support, which has now become resistance, and then a pretty nice downtrend started. So we see prices come down, retest a previous level of resistance, and from that point forward, we sold all the way off. Now, along the way down, I was trying to catch each little pullback up to each level of resistance, but the market was moving fast, and sometimes when the market moves fast like this, you might only have one opportunity to get in. So for me, that opportunity came right here at trade number three. So at three, I shorted here as prices came back to retest a previous level of resistance. And I just looked to take it all the way back down to either this level where the body's closed at for this tweezer bottom down here, or all the way back down to these wicks where we actually saw an extreme get formed. So that was my original goal, but during this trade, prices actually came back to stop me out at break even, and that's something that happens pretty occasionally and pretty frequently, and sometimes you just got to live with it. But I learned my lesson from trades one and two about not trying to chase the market after you have a break even trade. If it's a break even trade, you just simply sit back and wait for the next best opportunity. So that next best opportunity came for me at trade number four. So whenever I see the downtrend kind of wick off and then I see demand start to roll in, whether it's enough to make a green candle or enough to just make a long tail candle wick, I like to mark that level up with a trend line and then use that as a reference point to go short from if prices are ever able to break back down below that price, close below it, and then come back and retest it. And that's exactly what I saw happen at trade number four. So once I saw prices come back to retest resistance, I shorted as prices were moving away. And I had a pretty good trade right here. I was able to take it all the way back down to where these wicks were from that extreme that we were just talking about, which is decent. That's not a bad trade. But I think on this trade, if we read the notes, it says good trade, but my exit could have been better. And the reason that I say that is because I saw that yesterday's closing price was not too far away from where we were right here. So up here at this junction, we were, I believe I want to I want to say I went short at 943. So 883, where we had yesterday's closing price, was not too far away. It was 60 points away, and from the strength of the downtrend that we saw from before, it was a reasonable thought to think that prices should come down to that level. Now, whether they were going to go straight down to that level or pull back, I wasn't sure about. And if I would have just held this trade, it would have went straight down to that level. But as prices started to pull back, once they hit this level of support right here, I got a little bit uneasy about the trade, and I was like, you know what, I've already hit my scalp target, so let me get out of the trade right here. Even though I believe that it's going down to yesterday's closing price, let me get out right here, and then let me find a good entry to get right back into the trade. So instead of being able to hold this trade all the way back down to that level, I got out and was looking for a new entry, but I was kind of timid and I was very conservative trying to find that new entry. And because I wasn't aggressive, I actually wasn't able to get back in. So I think going forward in the future, if the trend is strong enough and is moving towards a level that makes sense, instead of me getting out as prices start to pull back, I should start thinking about, if the market was to pull back right here and not go straight to my profit target, what would be the most logical area that the pullback would run its course up to, and then finally start to move away from when it finds resistance right there. I think that's the mindset to have. So don't get out of the trade, but as a matter of fact, look to add to that trade at the proper levels where you feel like the pullbacks should kind of fizzle out a little bit. So going forward, that's the mindset I want to use for trades like trade number 4, especially when the volatility is as strong as it was during this entire downswing. Definitely something important to learn right there. So then we move on to trade number 5. So after we see this long move to the downside, we pretty much had a spike back up to the upside, right back over yesterday's closing price. So we peaked down below it for a good little second, but popped right back above it in a few minutes. So that's more of a false test to the downside, where we tried to break below yesterday's closing price, but we actually weren't able to do it. And that's a very bullish sign. And then you look at the fact that we formed a higher low coming out of a downtrend reversal right on top of yesterday's closing price. That validates the fact that the buyers are strong down there even more. So once we see this higher low get formed, I saw my setup. And you know me, I love to use the higher low setup, especially coming after a downtrend reversal. But the only thing is, when you want to go long in a setup like this, you want to make sure that you buy as close as you can to that support level of that higher low. The further away you buy from that, the more chance you have of your trade getting stopped out, because for whatever reasons that exist, whenever that higher low gets created, that usually acts as a level of support that's kind of magnetic. So if you see prices coming back down to that higher low support level, just wait for them to get there and then go long. And that's pretty much the mistake that I made on trade 5. So I went long at what I thought was a level of support rather than going long at yesterday's closing price, which also lined up with that previous higher low that got made. So on me, that was just a little mistake right there. And I think the reason I made that mistake is because I got a little bit too excited. I saw my setup starting to form, and I felt as though I would miss out if I didn't get in right here and right there. And I think that goes back to what I talked about on a video before, where I said you have to have a mindset of abundance, where it's like, look, I'm taking my entries from the best possible prices from the best levels that I choose. And if I can't get filled at those levels, then I just won't take that trade and I'll wait for the next best opportunity. You don't have to think that the market is going to move without you, because there'll be plenty of opportunities all day long, and you can capitalize on all of those whenever you see your setup start to form. So don't feel like you have to get in right here, right now. Put your orders at the best possible levels, and then if they come back and they fill you, they fill your orders. But if they don't, they just don't, and you continue to wait and be patient. So I think that's the main thing to take away from trade number 5. So I come back on trade number 6, and I pretty much had the same problem, just trying to buy from that same level that I did at trade number 5. But once again, I was still buying a little bit too high. If I would have went long at lower prices on both 5 and trade number 6, I would have done pretty well. So then on trade 7, I finally got it back right when I had the confirmation signals that I should have been looking for on 5 and 6. So I went long on trade 7, but prices came back, stopped me out for break even, which is okay. Now I saw the market come back to my price once again, but I was like, you know what? If I had a break even trade before, I don't want to push the issue and try and test the market once again. So let me just wait for a better opportunity. So eventually we see prices come back up, break back above what used to be resistance. So once I saw this higher low get formed right here, I was like, oh, okay, we made a higher low on top of the support level that used to be resistance, and we came back and retested our previous high. So the market should be moving up to create a new high. That's what I was thinking right here, but I was just a little bit too early when I went long on trade number 8, and I went long too high into the move of this potential upswing. And that's something that I always preach about, which is no matter what happens in the market, you gotta avoid that urge that you have to go long at higher prices. Now, there will be times in the day and during certain sessions where you have very compelling reasons to go long at higher prices. But no matter what those reasons might be, you gotta avoid that urge at all costs, because I would say like 9 times out of 10, buying at the highest prices of a swing is just an unreliable entry if you use tight stop losses like I use. Now, if I had a stop loss that expanded all the way back down to yesterday's closing price, yeah, maybe I could have went long right there, but I trade with tight stops, so I have to get in at the best possible levels, and that's something that I'm still learning, and I'm getting better at, but I'm not perfect at it, and trade 8 is a perfect example of that. Now, after trade 8, I was like, okay, if we're respecting this low down here that we created from trade number 7 where we had the higher low, we came back to that level and was never able to break down below it. So I said, okay, we pushed up off of it, and then we created a new higher low right here towards trade number 9 where I have it circled up. So I drew my level of support across the bottoms for the wicks of that higher low right there, and as they came back to retest that level, that's where I went long at 9. Now this trade kind of played out for a good little amount of time, longer than usual, but eventually it did break to the upside and come back to retest these highs up here. Now this was a pretty decent trade for me, not too bad, but on this trade I also say that my exit could have been better. And the reason that I say that is because I initially expected for the market to break past this level or this high right here that we had. And the reason that I expected that is because we saw that prices have already dropped back down below yesterday's closing price, got back above it, and from that point forward we were pretty much following this trend line all the way back up, all the way back up. So I figured that once we get back up to these levels where the highs previously were, if I don't see any signals that tell me that I should sell, and if I see any bullish signals at all, like a higher low that got formed right here, then I should hold that trade and be able to take it back up to the same place that I entered the short trade on trade number 3. Because I was like, you know what, if you look to the left, that actually lines up with the first higher low that got established when the market opened. So we should expect for that level to play some type of role as prices come back into it. So I used that as the area that I was potentially aiming for to get out of this trade at trade number 9. But when prices got back up here, I started thinking to myself a little bit too much, and I was like, I had to wait a little bit longer than usual to get this profit. It's at a level that makes sense to get out of, and I'm like, what if these levels hold up as resistance and prices come all the way back down to my entry and they take the profit away from me? I was like, man, I don't want to give that back. So I just made the decision to get out right there, but it was something inside of me that said just hold that trade. And I think going forward in the future, what I can do in situations like this is, instead of thinking about the profit that I have already, think about what you would need to see as a short seller to short right here. And if you can't think of any reasons to go short right here and you're in a long position, then just continue to hold your trade until you start to see any type of selling signals coming to the market. Then you can start thinking about getting out. So for me, let's say I would have held this trade and not actually had a profit target up here at where trade number 3 used to be. I could have potentially gotten out once I saw prices break back down below what was a higher low that got established. So once they broke through right here and then came back to retest it and then started to move away, I could have got out right here towards 960. So instead of catching the 25 that I did on this, I would have been able to catch about 40 to 45 points. So just those little things of being able to recognize when to hold a trade and when to take profit, those things make a big difference, and that's something that I definitely learned on trade 9. So as we move on, we see prices come back, and this sell-off that we were talking about actually sold off all the way back down to retest the initial breakout level from that zone that we established right after trade 9. So right here on trade 10, I kind of shorted but I shorted way too late in the downswing because I saw this move right here. And then once I saw this green candle come back to retest this higher low and get rejected, I'm like, okay, we should be thinking short right here. So I'm like, okay, all I need is for prices to come back, retest a previous level of resistance, and if I get that, I'll look to go short. So I tried to do that on this one specific level of resistance right here, but I was too slow. I missed it, and I tried to chase the market down and get in short at trade 10. But when you miss your best opportunity that you're looking for in the trend, you don't want to chase the market down and keep trying to force it. You know, you want to wait for the next best opportunity, not just the next opportunity. And that's pretty much where I went wrong on trade 10. And for the most part, shorted towards the lows of the swing. And the same way that you don't want to go long at the highs of a swing like we did on trade 8, you also don't want to go short towards the lows of a swing like I did on trade number 10. So that trade came all the way back up to the previous level of resistance and then got stopped out. But once I saw this higher low form right here, I was like, okay, we came back, found support at what used to be a previous zone that we broke out from. We respected that breakout. We bounced off and found support at that breakout area and then formed a higher low after that. So everything in the market right now is pointing to the bullish side. So I started looking for my long entries. So at 11, as prices came back to retest that higher low that just got established, that's where I went long. So I took that trade and then held it all the way back up to the top of structure where we made that previous high from around 11:30 this morning, about 20 minutes earlier. So that right there was definitely one of my best trades of the day. I read the market the right way, and then I made the right trade, and I think I had a great entry and a great exit, and I managed to trade very well. So going forward in the future, things like trade 11 is what I really want to look to try and replicate. So after 11, we see prices kind of form a zone a little bit in between this previous high, these lows at 10, these lows at 11, and this third low right here right after trade 11. And then we see the tops of it get formed towards 34,985, and that level held up for a good amount of time. Now, I really didn't realize that we were trading in a range until about we got to trade 12. And when we look at trade 12, if you look at what I did, let's read the notes. Remember that entries from the middle of the zone are too risky. Fight this urge. And that's so important because anytime I trade from the middle of a consolidation zone, I find that I have a very significant amount of trades that actually don't end up in profit and they end up as losses. So I've tried my best to try and avoid going long or going short within the middle of a zone, no matter how appealing it may be. Now, in this specific scenario, I expected for prices to come back and retest what was a little, I guess you could call this a higher low. I would say it's kind of a stretch calling this one a higher low because it's only one candle and it's almost like a little small doji. So you don't really want to put too much faith in that in terms of opening a position based on that level. So I was kind of forcing the issue right there on trade 12, and I had to take a loss because of that. Now, looking back in retrospect, it would have made sense to go long as prices came back to retest the same level that I went long from at trade 11, because one thing I've learned in the market is that if a trade worked before and the market scenario is the same as it was when that trade worked from earlier, you pretty much had a green light to take that trade because the probabilities of that trade doing the same thing that it did before are increased. It's not always guaranteed that it'll happen that way, but the chances are definitely increased, and that was exactly what we saw right here in the aftermath of trade number 12. So we came back, tested the bottom of the zone, sold all the way back up to the top, and then pulled back, but we established a higher low. So once I saw this higher low right here and I saw that prices couldn't come back to the bottom of the zone, I viewed that as a very bullish signal. So I said, okay, if we are in the zone but we haven't come back down to the bottom of it and we established a higher low, that should be the sign that I'm looking for that says that prices are almost ready to break out. So then once we saw this next higher low right here, I was like, ooh, okay, it was definitely starting to break out. We're getting to a point where it's either like we either gonna break to the upside past this level of resistance, or we're gonna have a big move to the downside. Now today was actually one of those days where the market continued down, and you know, I had to take a loss on trade 13 because I was expecting the breakout, which, you know, like I said before on trade number 8, no matter how strong those urges might be, you cannot go long from the highs of the swing at higher prices. You just can't do it. Everything right here in my mind was screaming to me that, yes, this is where you should go long from. but that just wasn't the case. You got to go long from lower prices and after you see bullish confirmation. In this specific scenario, I was not able to see any of those things. As a matter of fact, I bought as prices were coming out of a lower high, because if this was the highest point for the swing, we pulled down right here, came back and made a lower high right here, right? It's very minimal, but a lower high is a lower high. We pushed down, retested this higher low, came back to retest the top of the zone, and then sold off. So for me to go long right there after seeing those things, that's not the best idea right there. And I had to take a loss and learn that lesson right there. So 13, let's read the notes. Even though it may be tempting, don't buy the highs of a zone. So overall today, I would say, it's not my best day, not my worst day, kind of somewhere in the middle, but I definitely learned a lot of things. And the things that I can say that I can focus on the most are the things that I already know. It's not too many new lessons that I've learned today. All of these lessons are things that I've already discussed. So if that's the issue that I'm having, I think that comes back down to focus. I think I got a little bit overconfident because of these last couple of days, and I came in today and was like, all right, yep, let me make some profit real quick and then be on about my way. Even though you might feel like that, you can't just come into the market with that type of mindset. You still have to put your work in. You still have to come in prepared, and you have to focus 100% on what you have to do. Every decision you need to be 100% focused on, and make sure that you make the proper move and make the proper decision for that moment, so that going forward in the future you can make good trades which would lead to profit. So I think that goes back to me and what I always say when I say that every detail matters and every decision is important. So I think that's what I need to focus on the most, just getting my focus right, coming in 100% prepared and ready to attack the market with a good game plan. And I think if I get those things in line, I should be good for the rest of the week. So I know what I need to work on. I hope you guys were able to learn a little bit from today's trade review, because I know I definitely was able to. Also, I'll be back tomorrow on August 31st, somewhere between 9:30 and 9:40 a.m. Today's live session is up on my live section for my video channel right now. So make sure you go check that out if you haven't. But that's all I got for you guys right now. I'll be back tomorrow. But until then, you guys, take it easy.